After 2 consecutive years of growth, insurance companies' holdings in hedge funds have tapered off. This comes as insurers have expanded their multi-strategy allocations for greater diversification benefits. These developments and others in this area are detailed in a new Best Special report on hedge fund investments by insurers. I'm John Weber for AM Best TV, and here to discuss the report in further detail are Associate Director Jason Hopper and Industry Analyst Helen Anderson. And Jason, talk to us a little bit about how these investments performed last year.
Sure. Thanks, John. So as you said, after 2 years of favorable returns, the hedge fund industry turned negative at year-end 2022. There was quite a wide divergence among hedge fund managers as well as strategies. Larger managers tended to do worse. And certain strategies such as equity also performed more unfavorably compared to some others. They're important to keep in mind that hedge funds do account for a relatively small portion of invested assets. So it's not like the negative returns are really going to have an outsized impact on overall investment income. But even still, nonetheless, there was a lot of volatility in the equity markets, as well as rising interest rates pushing down bond yields. So hedge funds did combat some of the worsened performance within those two markets as well. So there was some hedge there.
Helen, we saw a shift in investment volume that varied across segments. Can you talk to us about that?
So the volume overall went down in the life annuity segment. Hedge fund investments declined by about $500 million in terms of book adjusted carrying value. In PC, there was a little more, a decline of about $700 million. In the health segment, the volume was relatively flat, but health has the lowest exposure of the three. They only have about $300 million in exposure anyways.
Are the hedge fund investments concentrated among specific insurers?
Yes, it's highly concentrated. Just 15 insurers account for about 80% of hedge fund exposure. And in fact, the top insurer accounts for about 20%.
How do the insurance segments vary in terms of multi-strategy allocations?
So multi-strategy is the most popular strategy across the board. Both life and health are more concentrated in it. About 76% of hedge fund investments in the health segment are allocated to multi-strategy, and about 62% on the life side. PC is a little less concentrated. About 28% of their hedge fund investments are in multi-strategy.
Thanks, Helen. Jason?
Thanks, John.
Thanks, John.
You can find the full report online at ambest.com. That was Associate Director Jason Hopper and Industry Analyst Helen Anderson. I'm John Weber for AM Best TV.